And good morning, everyone, and welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, building expert advisors for the MetaTrader 4 and MetaTrader 5 platforms, and just in general becoming a better trader, and then sharing my results with you so you can become a better trader. It is Tuesday, July 28th. We've got a lot of news coming out tomorrow, which is going to be the Fed rate decision, and then we also have the British rate decision after that, Japanese rate decision after that. So a lot of fun things going on that could greatly affect the Forex markets and how you trade them and how I trade them and stuff. So with that, let's go ahead and get into, let's just go ahead and jump into it today. Forex trading does have risks, and you need to know about those risks, and they go something like this. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. I have held NFA registration in the past. Now, Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So with that, let's go ahead and get into what we're going to talk about today. First, let's talk about, you guessed it, me some more. Here are the two EAs I've got out. I'm going to be uploading an indicator tomorrow, a free indicator that shows where the 50 to 60% pullback range is on trends. On a notice, by all means, not going to be a it's not a signal. Don't get me wrong. It's not a trade signal. It's an indicator to show you where the next setup could be as far as a Fibonacci rate pullback could indicate. Done some research on it, discovered that there's an 83% chance that it's going to pull back between the 50 and 68 range to put the numbers into quickly quantifiable amounts. That's a very strong possibility that if after a trend it's going to pull back to at least the 50% and most of the time 61%. Then there's also two targets behind that are even more susceptible to a pullback. So that's kind of one way to look at things. I'll show you that in a minute. Although I've got a green screen. I'm showing a green screen just so we can get me and the screens on here. So I may have to figure out how to show that without showing me on it. That might be a good thing. But at any rate, we'll get to that later. But at any rate, meantime, we have the Bollinger Band Mean Reversion Pro for MetaTrader 4 and MetaTrader 5. I have yet to advertise these, and they're already gotten some downloads. We'll see if we can't get that better. So the free downloads, you can download these for free. Just go here, click on that. And free demo, or go to NeelyFX Trader. Look for that NeelyFX Trader, and you can find the products that way too. That is my name on this thing. Go here, go to profile, and then you'll see them there. I'll also post some other things there. Let's go in here. I've got a rating. Oh, how about that? I'll put up some more stuff tomorrow. Got an indicator. I'm not going to put in libraries, I don't think. And maybe I'll put up a library. Who knows? With that, that's about all I've got for there. Then let's talk about tradingforextraprofit.com. I'm going to log in here. This is my site that I'm building to help me become a better trader and help other traders become a better trader. I'm going to go with the full blast version to show you what's going to happen if you sign up for full blast. I'm going to work on some more content for this too. Oops. And oh no, I've forgotten who I am. There we go. That's who I am. Okay, so we've got the journal right here. First, load your account. Come in here and load an account. I've got some accounts right here. This information is not good anymore. It's not accurate. It's I need to use this journal as well, and I've got a few more trades I need to import into that and delete the May Traders Cup because that's done. Which is a fun prop firm challenge. I may get into August. Make that decision probably tomorrow. Probably do it. Why not? It's fun, and it gets me more familiar with the DX Trade platform, which is also a fun platform. Account activity. You can load your account activity right here, and depending on how you uploaded your, you get import trades right here. Import all your trades, get caught up, because if you've been trading before, then you can certainly do that. If you're a first-time trader, then you would start from blank and then go from there. I highly recommend taking your MT4, MT5 history and then building it into a CSV so you can get all your information in there, like swaps, because it's our swaps that take place, especially if you're in the Japanese pairs. Then we have the journal right here, the trading journal. Let's take a look at this. So I just added a new feature. So we have a whole bunch of stuff going on. We have trader notes right here. We have mistake tags. You can log in where your mistakes went wrong. Oh, there's something else I had to do and I didn't do. Okay, so never mind. It's not fully functional right now. I've got to fix that when I get back. I'm going to run PHP migrate. So with that, I've got some things here and I forgot to do that. Oopsies. So we'll have to do that and do another commit before that's valid, before the latest changes are valid or working. Probably should do that before I leave. But anyway, I am going to have to go super fast on this, so feel free to check it out. There's the journal. You've got the import strategies. You can put your strategies in here. Also, billing. You can start for free right here, and then if you really like it, you can come in here and load multiple accounts. If you're like me and are a trader with some experience and have multiple trading accounts, and hopefully they've got money in them. Or demo accounts, multiple demo accounts. If you're trying out new things, you can definitely do that too. So with that, let's get into Market Pulse and see what's happening today. So we're going to go back to the public site, Market Pulse, and see what's happening today. Right now it's neutral, which is about where I would expect it with the Wednesday meeting happening tomorrow. The FOMC or the Fed rates coming out tomorrow. I wouldn't expect a whole lot of activity, as well as the US-Iran thing. I think they've been bombed into submission, maybe. If not, we got plenty more. Let's see. I'm speaking from a U.S. military perspective because I was in the military once upon a time. And I know we got a lot more bombs than what we dropped already. So, it keeps the American economy strong, too. I should say that. But at any rate, here's the... that's what's going on with that. Market sentiment is about neutral right now. This does not take other things into account, like the stock markets of the DAX, DAX 1000, I think it is, or the DAX, or the FTSE, or any of the European stock markets, or the American stock markets for that matter. It's strictly currencies and bond rates. I think is how we built that. And I'll be updating that with possibly a better risk sentiment thing later, although this one's not bad. I must confess, it's not bad at all. I need to get rid of that. That does not exist, and do something over here better. In just a second, where was I with that? Now let's get into the news, or the calendar. The calendar today goes something like this. We have the consumer conference board, consumer conference, coming out today at 10 o'clock, and then trim CPI for the Australian markets tomorrow, and then there's the big one tomorrow, Fed funds rate, and the FOMC statement and the FOMC presser. That'll be Kevin Warsh's second presser. We'll see how he does with that. Let's get into some charts. First, DXY. No, it's not where we start. We start up here at the Bitcoin. Bitcoin's right here. Yay. Bitcoin's at 63,530. I do not trade crypto, so I'm totally on the sidelines on this pretty much forever. I don't it is hovering right here about here. February 26th daily low seems to be there right now again. So we're looking at the February 26th weekly low. Could crash below that, or could go down below that. We'll see what happens with that. Meantime, I don't trade, and I'll say it again, I don't trade Forex. I mean, crypto, I don't recommend it. At any rate, because I don't understand how it works in the macro economy. With that being said, we've got the US 10-year right here. US 10-year is way down to 4.622, but it's not where anybody likes it, which is down under 4.5. So it's still somewhat inflationary for the United States. After that, let's go down to the Japanese 10-year right here. And it is off a little bit too. It's off of its highs right here. We're looking for a rate decision a little bit later on. They're expected to hold, but we will see if they do. That's being the wild card in the whole economic layout of things. Let's shift over here. there, and open this. Pound versus the yen. That's not what we want to look at. So we're going to look at this right here, the Japanese 10-year or the American 10-year, Japanese 10-year, see if it'll hold up. So the US 10-year and Japanese 10-year. There we go. So now we have the correlation between the two, and they are converging, but they are not have yet to cross. So the Japanese, the yen carry trade is not breaking down. A lot of people will tell you that it is, but they're actually moving almost in tandem right now. Again, I've said it before. I'll say it again. The closest they've ever come to the yen carry trade breaking down was COVID during the I guess January of 2020 to call it November of 2020 was the closest that it's ever come to breaking down, and it didn't break down then, so onward. With that, we'll come back over to this chart and get rid of that one. We're here to the Euro versus Great British Pound. Euro is kind of finding it's starting to struggle against the pound a little bit. We'll see if that continues, so we might have a little bounce back in the pound versus the euro. Definitely see on that. That might have a correlation between the that I'm watching the pound versus the yen right now, because I do like that that pair. Let's see what happens. DXY off to the races. 101.62 could go higher, especially if depending on the Fed funds rate tomorrow, but more importantly the presser tomorrow, to see what they're going to do with there. See what Kevin Warsh is more transparent tomorrow than he is today, so we'll see. Euro versus the dollar, down 113.59. That's about as low as it has gone in the past few days. Looks like that might be somewhat of a bottom, trying to form somewhat of a bottom at 114 at 113.50. Pound versus the dollar, 132.78, down. Do not think I would go on the upside to that one anytime soon. Until it finds a bottom, because that bottom could be right down here at 131.69 or 131.9. So it might have some more way to go before it turns, and it will turn at some point. Just not sure when. Look at that, Swissy dollar versus the Swissy over 82. That might be a good buy strategy if you like the Swissy. I personally have not traded the Swissy in 11 years. Last time I did, I almost got wiped out. No, the last time I did get wiped out, come to think of it. But I watched to see what the other big boys were doing before I realized they were hedging the trade. Let's see. Pound versus the yen. Let's go to the yen pairs. Pound versus the yen. $1.60, 163.94. Looks like it might be off to the races. I'm on this trade. I have a buy stop at 164.08. I think it might blow through 164.08 and possibly higher to 165 before tomorrow's meeting, and then it might pull back tomorrow. We'll see. And then after that, I'm going to need to get out of that trade before Thursday night. That's when the BOJ rate decision comes out and their press conference. So and I'm not going to be up at 2 o'clock in the morning to watch for that. Pound versus the yen, 217.65. Euro versus the yen. I do like all these stair steps though that's going on with this. You know, I don't know how many times I've said, if I could just catch it from here and go to there, you know, that's the broker in me talking. The former broker in me. I'm no longer a broker. Euro versus the yen right there. That's me trying to pitch myself basically. 186.21. Kind of fun. 116.18 on the CAD versus the yen. It's got some room to catch up, especially if it's trading in tandem with the oil market. The oil market is not it's not a good indication, not a good correlation between the CAD versus the yen and the oil market right now. Could change. We'll see. Aussie versus the has some downside potential to that. Aussie versus everything's got downside potential to it, but especially with the BOJ meeting coming up this week. Aussie versus the yen. I liked this trade down here, but we will see if it continues to go up. Crude oil, NYMEX crude oil got a delayed. Okay, it's delayed. Of course, it's delayed because it is the markets aren't open yet. I guess other markets will be trading the NYMEX contracts, but right now they don't open until 9:30, 10 o'clock, something like that. So they will be, you know, 80.93. We like that. We like to see oil coming down. So it takes some of the inflationary pressure off the world. Dollar versus the CAD, 141.11. Might be starting to turn around a little bit. So of course, that would have been down here at 140.21 would have been the turning point. So we'll see if that continues or if that ratchets down a little bit more. Aussie versus the dollar. Oh, gave up 70 yesterday or later on today. So I would not jump into this right now. It's still think it's consolidating, still thinking about what it wants to do next. Gold 40.25 bounced over 40.21 for 4100 yesterday and then gave back. So it's got a big pullback on that. I'm not sure if maybe something happened over the last couple of days. We might be bombing some people more in the last couple of hours, I should say. Platinum 115.97 starting to test 1600 a little bit. Palladium 112.55. Again, testing the downside to that. Silver, not a whole lot going on there. Let's talk IGVs. First, I want to look at the NASDAQ real quick and see what happened with that yesterday. It's off 89, which is very interesting. Look at all these gaps on that. That's very interesting to me. So the NASDAQ was off 89 yesterday. Let's look at the software stocks now. Software sector was up. A big gap right there from Friday's close to Monday's open. 90.91 on that, so it's up 3.3%. HubSpot's up 8%. Wow, look at that, 8.84%. So it's maybe having some small business turnaround on that. Salesforce up 600 or up 6%. Intuit up 2.56%. Looks like the software sector may be getting a little bit more of a bottom to it. Maybe we might see some resurgence in SaaS, software as a service. I'm building one. It's right there. So it might be time for these to break out a little bit more. Adobe, right there, up 5.67%, up over well over 200, or down here a few weeks ago is under 200. Would have been a good play. Maybe we need to start looking at this a little bit more closely. Upwork was up 4.87%. Could go higher. Hate to say it. Could go higher. Don't like it. Don't have to like it, but it could go higher. Hate the stock. Hate the company, but it could go higher from an investment point of view. Look at that. Huge gap right there in the Magnificent 7. ETF down 2.24%. It's a big gap from a couple days ago. Monday, Friday, Thursday. Ooh, oh well. Google. I was away. I was on vacation, so it was down 2.13%. Google, Amazon off 0.3%. Apple is off something 1.7%. So pretty lackluster day as far as the Big 7 goes. Meta has been advertising on TV lately, which is very odd to me that they're advertising on TV. That's pretty much a scream that we're raising money. We need your money. To me, more so than hey, try Facebook or Instagram, because those two are dominant in the social media fields. But Nvidia off 5% yesterday. So it could be that the AI bubble is starting to pop a little bit. Tesla down 1.22 and SPCX off 1.36% down to 1.1. It is we've got a lower market open right there at 1.110. So it's everybody's losing money on that stock now, unless you work there for 10 years and then you're doing all right. But anyway, that is about all I've got for today. If you like this video, then hit the thumbs up button. If you want to see more of these videos, then subscribe to the channel. And lastly, what is it? Oh yeah, if you want to talk to me directly, hit me up in the comment section and I'll respond as soon as I see it. So you guys have a great one and I'll talk to you later. Bye.